Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 18th of May, 2020. Thanks for joining me on episode number 1757. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk allocation, the market allocation is to risk. Pretty strong, in fact. Crude oil, the July crude is trading up 9%, 9% up $2.70 at 32.20 on the July. The Russell is higher by 5.66% or 70.6 points, just really popping higher in the Russell. The DAX is up really strong, 447 points, 4.28%. The Euro stock's up 104 points. That's a lot, or 3.78%. The Dow's up 766 in the futures, 3.26%. And the S&P is up 83 points, or almost 3%, 2.92, trading near overnight highs. And the Nasdaq's up 181 and a quarter, or 2%. The laggard today are the bonds. The bonds are down a handle and 9 ticks, with the dollar also coming off 21 and a half ticks, 21 and a half cents, and the 10-year note down 8.5 ticks. Gold was up strong, but now down $1.90 in the June contract, down 0.11%. Been keeping an eye on gold, especially micro gold. I believe it's a pretty interesting contract. Again, is part of the micro complex, but it's a way to participate without sticking our necks out too far with a product that can move very, very strong and very directionally. So that's where we stand. Why is the market up here? Is probably the question. And essentially, what's going on is because the market's a forward-looking mechanism, right? It's not a backwards-looking mechanism. It's efficient. It's not as efficient as an economics book will tell you, but it's relatively efficient, and that seems to baffle people that the economy has shut down. 28 million people have lost their jobs in the United States. Many across the globe, economies have slowed down. GDP's in the negative, which technically is a recession. Um, People are still dying. States like my state, Illinois, the state within which Chicago exists, is still on the upward trajectory in terms of positive cases and deaths. So we haven't topped out like New York has, and so on. There's a resurgence of coronavirus in China. Almost 100 million people have been ordered to lock in due to another resurgence in the virus. And we're all sitting here going, why is the market higher? But here's the thing: why argue with it? Why argue with it? This is not a place to argue. This is like swimming against the ocean. There's just no sense in doing that. So the market's a forward-looking mechanism. There are things that are changing to the positive that are expected to help earnings. As an example, Apple reopened 24 more U.S. stores and will soon reach about 100 stores that were reopened worldwide. Um, and most states are working on a multi-phase reopen starting this week. Some have already opened, and so on. So the shutdowns are being loosened, and so the expectation is that money will start flowing again, and so the market's reflecting that. And I'm not saying that that's the reason. I'm just simply saying don't argue with it. There's no sense in sitting here and deciding that the fact that we're trading after a big drop last week, the fact that we're trading near last Monday's high, this is not necessarily the reason to think that we should be short. The fact is, um, we're looking at price action, we're looking at value, the migration of value, and that's all that matters. Okay, so that's where we stand. Looking at the calendar today, really not much to cover. Um, yeah, there's not much to cover today. We have, what is this? Yeah, this is not correct. I'm UTC -5. My calendar timings are not correct today. The only thing we have to look for is the NAHB Housing Market Index at 10 Eastern. That's about all I've got for today's calendar. There's a 3-month and a 6-month bill auction, as there always is. But other than that, there's not much to discuss for today. So let's take a look at what was expected last week versus what we got. Here's what was expected on Friday. On Friday, the expectation is it may dip down into 28.10, but the overall expectation is a trend up. I'm looking for it to squeeze through the prior day's high at approximately 53, and to push into the 29.73 potentially. There are multiple tops, 28.68 that I would look to target, and that would take out the overnight high. That's the main scenario of Friday. If Friday's push higher fails, which it would around 28.31 to 33, that's the expectation. If it fails, and I'm expecting it to rotate all the way down to 27.87 or so. Of course, that did not happen. We ended up pushing up on Friday. Here we go. Push down 2809.50 if you recall. That was a big area from a couple days before that. 2809, 2810 if you recall. 2825, 2829 as well. And those levels are shown in the stock zones right here. Why is this blue? Let me go to white. So 2829, 2825 right here, 2810, very beautifully played. Pushes back to the prior day's point of control in the close of 28.47. It's actually 46.75. Takes it out by a tick. Very orderly auction. Pulls back to the mid, almost to the tick here again, and rotates back up approximately 12 points before it fails to continue, and then it just spills through. And this looks like it is likely to continue lower. Retested the mid from below into 29. The mid was at 28, about a point of heat and about 10 points of gain on that. I expected this to at least tackle the 1475. That was the key target, and then to mash through the 2809 and start working on scenario 2, but it didn't. It ended up rotating back up and consolidating, putting in a double top right here at the 47-ish, and squeezing the IB high and through, and ended up pushing this high of 53.75. And what ends up happening on Friday is it ends up putting in another week high. Look at that high. There's no excess there. A lot of volume near the top before it sells off back into the IB. What we have on Friday is a normal day. Again, just like Thursday, it's a serrated knife or a jigsaw kind of structure. You can see that the volume at price is just really jagged. And what this is again telling us is that there's active price discovery in both directions. They are just fighting it out up and down the price range. with a weak high. And so what this tells us, for those of you who have been around a while, what this tells us is it's very, very likely to take out the overnight high. The thing is, it didn't finish near the top, so probabilities are kind of lower. But overall, we did not have a true value area here on Friday. It's a very blunt price discovery, which is basically a continuation of Thursday. That's what we have on Friday. The other interesting fact is we have a point of control up here at 46.75, and then on Friday we actually had a point of control. It's a little bit lower at 43. It's a technical lower point of control, but essentially the both days kind of played into each other in that they closed at the same price uh, pretty much on the dot. Thursday closed at 46.75 and Friday closed at 46.50. 46.75 versus 46.50 on Friday. Here's we see it right here in the market profile. The close is marked by an asterisk, a red asterisk, and you can see them perfectly in line there. On the market profile, the Thursday's Thursday's point of control and Friday's point of control had shifted up, whereas on the volume profile, the point of control was pretty steady and has shifted down slightly, really technically about the same level from here to here. And so that's where we stand. We have a very stable kind of area here where the market is really active, discovering price in both directions. Despite the fact that the open was down here and the close was way up here, if you look down below, you'll notice that the delta wasn't all there. The delta did move with price on the way up, but as the market consolidated up here into the close, there's quite a bit of selling. It ended up pushing delta back to almost zero, finishing at plus 881 contracts more traded on the offer, meaning buying versus selling at the bid. And so what this is telling us is, despite the price discovery, there isn't really a volume aggressor there. You know, we're measuring with a volume delta, we're measuring aggressors. We're not measuring who's already in. That shows up on your volume profile. We can see who's already in, right? Where people are in. That's our volume profile. And we cannot measure the third force in the market, which is who's still sidelined, who's still standing by and can enter the market. These are the people that tend to really mess up our trades. Is this third force that can step in at any moment and push against us or for us. But what we can measure is the aggressors. You know, there's a reason why someone would actually reach across the market instead of joining the bid. They would reach across the market and lift the offer, and those we call aggressors, and that's what the volume delta is measuring. What it's showing is, despite the fact that we were moving up, the delta finished basically the same, which I find interesting. You would expect it to continue to push higher since it did not respond to the selling either. So that's where we stand on the overnight. Oh, that's not it. On the overnight, here's what we have. We open, pull back, very, very small, put in an overnight low at 28.50 on the nose, and then we push above Friday's high, and we start to really take off, and we're pushing pretty strong from 645 onwards. China's reducing tariffs across the board. Market likes that information, and some volume really came in. You can see the delta really popped here, and this has moved quite a bit. Otherwise, the profile would have been a triple distribution profile up to that point. Um, and um, uh, and then it took off, and now we've shifted the point of control. There's enough volume here to shift the point of control to the high at 29.3375. The point of control is at 29.29 with a weak high. This is likely to trickle up from here. That's what that's indicating. Positive delta overnight, and inventories 100% long coming into the session. Here's what the overall big picture is. We have pushed into the 62%, 61.8% from the all-time high to the swing low. We poked through. That high was the 62% was 29.23. We pushed to 29.47. And then we sold off with a gap down, came back in, put in a lower high, and we had that strong sell-off day with a lower low. And here we are tackling this intermediate high that we put in, and that was at 39 and a half, I think. Let me see. 39 and a quarter. This high here is at 39 and a quarter, 47, 39 and a quarter, lower high, lower low on the composite. So you want to keep a very close eye on this 39.40 area. If it gets taken out, then that 47 is likely to be taken out next, and then that puts us in play for 3,000. Beyond 3,000, you can see the volume is quite thin, and we start to climb right back up to where we were earlier this year before this sell-off. Everything is A-OK. The range last week picked up a little bit. Volume picked up a little bit with it falling off on Friday. We'll see how we do today. It is Monday. It's expected to be a slowish day, but overall the market's made a good run for it this morning. So let's take a look at, let me fix this, Bookmap. So here's CT Bookmap. This is we're gonna look at what the overall order flow picture is. I'm on a laptop here, and it's just the fan on it screaming, even though it's a very powerful laptop. Um, so this is the big picture in the overnight. You can see how it's really dominated by buying dots, by buying delta. Hang on, let's lock this. See how it's dominated by buying delta throughout. There. You know, throughout the session, you can see that the buyers have been pretty aggressive all the way through. It has really squeezed through these key volume areas, 2900, 2910, and is pushing into 2930 up here. Overall, the buyers are really taking whatever's in the way. Let me zoom in a little bit and squish the range. And you could see that pretty relentless buying into those offers. As sellers have come in with their offers, you know, they could be exiting positions or whatever. The market has really pushed in and taken that volume out. You can see it right there, a nice big collision and a retest again and again and again. And then once we break through, I expect that the 2930 will act as temporary support for a continuation 2945 coming into the session. So that's how things usually work. In general, we have a collision. We either break through, pull back to it and continue, or break to push up to it, fail, push up to it again, and break through usually, and then pull back to it and continue, and so on and so forth, unless it's an iceberg, in which case it does not continue. But you can see above us, there's liquidity at the 29.45, at the 29.45, and below it's kind of thin. You know, 29.13 has some volume there, but 29.45, 29.50 are well offered. My expectation is the market is likely to pull back and then walk itself into this 2950 area, which I talked about last week, and it just ended up turning at 39. It was kind of disappointing on that day. So that's where we stand there. Okay, so it's Monday, and I know I'm talking a lot. We still have to keep an eye on earnings, but look at where we are. So let's take a look at what's expected for today. Okay, so setting up this chart. Here's what's expected for today. We have a large gap up, low probability of a filling the gap zone or the internal gap. Look at where we are. So I'm going to quickly draw a profile up here to help us capture what we've got in terms of consolidation before the sell-off last Tuesday. We are above this point of control on a multi-pronged composite. So we have a cutoff here, a high volume node here, and a high volume node here. That cutoff price is 29.11-ish, 29.12. That's a collision zone from the order flow earlier, 29.12-ish. This morning, I'm expecting open auction tangled in this point of control. I'm expecting it to respond. Overnight inventory is 100% long. Expecting it to respond, get tangled up in 29.20. And as long as it holds at 29.10, then it's likely to impulse back up, take out this 33.75, go and take out the 39 spike up, and then consolidate and hold this 29.45 before it rests. That's today's primary scenario. Continuation of the gap in a gap and go fashion. These are, this is the kind of day where gap rules apply. If we don't get a response early on, then we trade in the direction of the gap, not against it. And so the secondary scenario is the opposite. It continues to squeeze into the 29.39, takes out the weak high, pushes the 39, spikes through, is unable to find further interest, and then it comes back to the open and starts filling back in towards that 29.10 area before it pauses. It might go through 29.10 a little bit, but I'm expecting it to battle in this region here. The market's finding value or cheap prices based on the information it left on Friday, where we ended up on Friday. And so we have to go with the fact that we have a gap and the market has pushed through. So the bias is up today despite this big gap. Expect this gap to remain open. Because there's a big gap, there's a potential for an open test drive down, open test drive up. So I'm, sitting back for the first 10, 15 minutes to see what happens before I decide to join in the fight and pick a direction. Remember, at the end of the day, there are 4 things we have to get right. I want to drill this into your head. 4 things we have to get right. We have to get our context and bias right. Context and bias right. That is what we do this homework for. We're determining our context and bias, and that's what the scenarios are for. We're waiting to find out what the market wants. Context and bias is number 1. Number 2 is execution or entry price. That's where all of your footprints and order flow and trading psychology and all that stuff comes in. Is at the execution. Don't wait for confirmation. Just see that the market's aligning itself and go with that. And then we have to predetermine our risk. Our risk is based on account size, rotation size, or some structure, whatever you want to use. And then the last piece we have to get right to make money. We have to get right to make money is we have to have good trade management. So we need to decide. We have to make sure we decide where our exit is. If we're trading multiples, the average per contract that we pull on this trade has to be better than 1R or 1 unit of risk. So if we're risking 4 points, the average has to be better than 4 points if we are going to have a sustainable day trading career. This is not true for momentum trading. Momentum trading, you could have a 30% win rate and still make money, but it's much easier to make sure that you're not taking trades where the target's 2 points away with the risk being 4 or 5 points away. That doesn't make any sense. So those four components, context, trade execution, risk, and trade management and targeting, got to get those right. Okay. All of those have to be right on every trade that works. Okay. So that's our focus. Good luck, and I'll catch you tomorrow morning. Take care.